I can't be the only one that feels like they've dated someone who's acting like the gold and silver markets are acting right now. Mrs. Stacker is going to kill me for that comment. Well, I said what I said, so I might as well defend it. I know this is going to sound a little crazy at first, but the easiest way to explain what's happening with prices in the market is by using a dating or relationship analogy. In particular, a little male relationship psychology at that.
What?
Come on, this is Stackers University. I would think by now you would be used to my somewhat unorthodox way of delivering information, but like bacon and chocolate, somehow it works. Well, that may not be totally fair because bacon makes everything better. Never mind. Okay, where was I? Yes, precious metals market and stereotypical male psychology in relationships. Now, if you're watching this video, I'm not talking about you because you're a member of Stackers University. You not only stack smarter, you also relationship smarter. So with that, I promise that this is not clickbait, but I do need you to stick with me because during this journey, I'm going to share with you some compelling information and data that will absolutely convince you that there's one last domino, I believe, that we need to monitor and wait for before prices really move and take off. And I promise you, this is not something you've heard before like a Fed pivot. Since 90% of my audience is men, I'm going to share a little secret that I learned from a couple of my female best friends one night. They taught me about women, happiness, and the oh so important point system. And the point system actually translates very well to investing. They told me to pretend that as a man, you need to accumulate, let's say 10 points a day in order to have maximum happiness with your woman. Everything you do that day earns you a point, loses you a point, or can simply be neutral. Okay, I was like, that's simple enough. Sounds great to me because in my mind, I was thinking like basketball. And that actually works as long as you realize that it doesn't matter if you score from 2 feet away or 21 feet away in this game. You only get 1 point. You only get 1 point for each act that you do. What they explained to me was that men tend to think of the grander the act, the more points you get, like shooting a 3-point versus shooting a layup. Well, that's not true, man. Unfortunately, a point is a point is a point in this game. I know this sounds weird, but let me take this now to investing because in any market, there are a number of variables and factors that can drive the market. It's easy to fall in love or fall in the trap of thinking that there's one magic bullet that is going to solve everything and make the market take off and your investments go through the roof. Frankly, it just doesn't really work that way. And those ladies taught me it's possible to score 5 points and have your woman be happy, but the more points, the better. Same thing in investing. It's the difference between a convergence versus the confluence of variables. Convergence is about things moving toward one another or towards coming together, while confluence is about the things actually coming together or mixing like two rivers joining. As an investor, I want you to think about it this way. Convergence is like seeing the early signs of a bull market, and that is when you should start building your positions because you see that things are starting to come together. And for me, for example, that's what I see when I look at the mining stocks. So I'm actively building my mining stocks positions now while things are converging or even out of favor in some ways. So in contrast, the physical metals market, though, has been converging for the last year or two in particular. And now we are finally at the point of kind of confluence where the market has almost transitioned from coming towards and it's basically coming all together right now. But we're not fully there, which is why we've seen things kind of start and stop. Ever since October, we've gone up, but we've always had these little weird movements. Your ability to see the difference is incredibly invaluable because it will allow you to do a number of things better, such as manage your investing budget, being patient, and making better decisions in general. This is why over the last 6 months to a year, we've seen more and more new stackers. They are starting to see the confluence of variables that say get into metals, while others of us saw the convergence and we began stacking years or two ago or even decades ago. Ultimately, we are at a pivot point or a tipping point, which can be extremely frustrating. And to make things worse, the market has given us these starts and stops or even mixed messages. For example, for the last year or so, gold and silver have moved opposite to the dollar index. And statistically speaking, that actually only happens 40% of the time, as this chart shows. But for the last year or two, it's been about 100% of the time. We've seen inflation skyrocket, and in 22, metals were basically flat. We saw Russia invade Ukraine, and prices spiked and then gave it all back the same year, and we ended up losing even more. Banks have failed just recently, and we've seen prices run up, and now the market is slowly taking that back. I want you to remember what I told you about the point system. A point is a point is a point, and your goal is to get to 10 points for maximum happiness. It's the same thing with investing. We want to get as many points as we can together because that gives us confirmation that we are headed in the right direction. Things are actually going to get there We just have to be a little patient. And right now we have about 8 or 9 points as I can tell. There's just a little more we need to do in order to reach 10 points, which leads me to what you should be watching next. And that's gold and silver ETF flows. It's one of, if not the last point that we need to score, because it's a derivative market. And so ETF flows can dramatically move prices because they will actually represent money flowing from stocks and bonds and other investments into metals. And when that happens, the market will take off because it'll be like trying to drink water from a fire hydrant. There's too much money for the system to actually handle it. Take a look at the chart of gold prices and global ETF holdings. And I want you to notice how the flows typically increase and prices increase with it and vice versa when it goes down. Now, notice the divergence that's occurred since September of 2022. When metals bottom, look at those green arrows that show how gold has increased despite ETF holdings falling to their lowest levels. You don't have to be Dr. Keith Weiner. By the way, you need to go watch my video with him if you haven't. It was phenomenal. But you don't have to be Dr. Keith to guess what will happen when money managers and big institutions start to reallocate funds into precious metals. This next slide shows you how money flows going into Bitcoin and gold ETFs. And don't even get me started with the amount of money flowing into Bitcoin. Instead, just look at the decline for gold. Next, look at the commodity trading advisor exposure to gold. You've got to be kidding me. One of the last points about Convergence and Confluence. Take a look at this chart, which is an overlay of the 1970s bull run and the current market price. And it's scary how similar the price charts really are. And you can actually see what could potentially happen. My hope is that you walk away from this video with a greater understanding of Convergence and Confluence and how you use that investor, because they may not seem that different, but in the eyes of an investor, they are worlds apart in terms of when you enter or start to buy an investment. Your ability to be patient, as well as knowing when things will finally move. The other thing I want you to walk away with is watching ETFs, because that's going to represent major money flows and money moving from one asset to another. And that really should just kickstart the whole thing for us. Today, I'm going to give you the questions to respond to in the comment section early. So here they are. Are there any other indicators we should be watching besides money flows into ETFs? Did you start investing in metals because of a convergence of information or a confluence, or simply because your eyes were finally open to the crazy world of fiat money? Or you can always just give yourself an A in the grade book. Hey, I haven't said my ending line yet, so don't you quick away yet, because I wanted to start the sponsored content portion of this video. Now, it seems like every time I do a sponsored video, I lose subscribers and people make comments about giving stock advice. I want to be clear that 1, this is not stock advice. 2, I'm only sharing information about the company and hopefully providing educational information along the way, especially around how to evaluate companies. And 3, regardless of whether or not I own the stock, I only bring you companies that I feel comfortable with. I turn down a lot of potential sponsors because I respect you as my audience, and you deserve me to filter out some of these requests. With that said, I am going to fully disclose that I do own this company, and actually, I just started developing my stock position last week. So when USGO Mining, NASDAQ stock ticker symbol USGO, reached out to me on Monday, I emphatically said yes. Let me tell you that I am very mad at myself because I totally dropped the ball. Back in February, when they announced that they were going to have USGO Mining be a spinoff of Gold Mining Inc. Hopefully you remember that video I did covering Gold Mining Inc. because that stock is actually up 30% since I shared it with you in November of last year. Regardless, Gold Mining Inc. spun off USGO Mining as a subsidiary to focus on their Whistler Gold Copper project in Alaska. Little did I know that this stock was going to come out the gate at $9 per share, only to jump right up to around $16. And little did I know that they were going to be listed on the NASDAQ and raise $20 million to fund the next part of their exploration and mining project in Whistler. That is absolutely insane, y'all. Most junior miners don't get introduced to the market that way. It's just unbelievable. In my defense, I didn't think it was going to be a big deal because Gold Mining Inc., the parent company, owns over 80% of this new company. Another exciting part of them being listed on the NASDAQ, though, is that it allows institutional buyers to purchase the stock, which, as I mentioned, when institutional money comes a running, prices move. And there's going to be more money than great companies like USGO Mining. As you know, I'm a firm believer in mining stocks because of the leverage they provide compared to the gold price as it increases. their profit margins dramatically increases, which comes back to you as an investor. Let's look at the 2015 to 2020 gold run and look what it did for Bear Gold. As the price of gold went up, you can see how dramatically their profit per ounce increased. This next slide shows as a whole what mining companies did from 2000 to 2011 and again from 2015 to 2020. At current price levels and premiums, physical gold can really eat up your budget, and mining stocks can give you a little extra torque that you need to make more money without having to purchase additional physical ounces. Speaking of ounces, wait for this, y'all. 3 million ounces indicated and 6.4 million inferred. That is a ton of gold, so much so that USGO Mining's CEO Tim Smith left his position at Newmont, one of the largest gold companies, to lead this venture, just as Alistair Still left Newmont to be the CEO of Gold Mining Inc. And of course, Amir Adnani is involved in this as well, and he's serving as one of the co-chairs of US Gold Mining. As you can tell, they clearly have strong leadership, and they have checked that leadership box. And we all know how important that is when it comes to mining company. Now let's talk about the value of the company and some numbers. Don't worry, I'm gonna make it simple. With a market cap of $180 million, and then you subtract the $20 million in cash, you have what is referred to as an enterprise value of $160 million. So if you take that $160 million and divide it by the 9.4 million ounces of gold resource equivalents that they have, that's just what they call it, folks. That means that when you purchase the stock, you are buying gold at $17 per ounce. Now that's all and well, but what does that really mean? So let's explore the simplest option. At this stage, other companies have sold for, let's call it right around $40 per ounce. And using just that number, US Gold Mining would have a $400 million value, which would double what it is right now. However, there have been 3 companies in the same area that they are in that have recently sold for $100 per ounce, which would then make them over $1 billion company. Regardless, I believe US Gold Mining represents tremendous value to investors, which is why I made a purchase of it last week, and partly why I agreed to do this video. Let me be clear. I'm not making any recommendations. I can only tell you what I'm doing with my money. And I just so happened to have purchased it last week. And that's because I do believe this is a very solid company. But you have to do your due diligence. You got to go and look at the company presentation, which I will link. You got to go and look at the analyst reports that will give you projections of what they think the price is going to be in the future. And then you got to look at the resources and the leadership of the company. And I think when you start to go through that, you see that they check all the boxes. So you have to be your own investor. You have to own your own results. But I do think US Gold Mining is something you should consider. Thank you for your time, folks. Always stack smarter and never stop learning.